What does this pledge to stop inflation really mean, and how will it impact you? WRAL's Matt Tallhelm took those questions to financial planners in Raleigh today to find out what families can do now to feel less pain from rising interest rates.
Higher interest rates make it more expensive to borrow money. We do that every time we buy something using a credit card. But higher interest rates can actually help us weather a financial storm by putting cash in the bank.
Don't freak out. Just hang on. Things will be okay.
That's the perspective only a financial advisor with 40 years of experience can provide as the Fed looks to raise interest rates to fight inflation.
They're trying to slow spending. Well, let's get ahead of the curve. Let's slow down our personal spending.
Gerald Townsend helps families at Townsend Asset Management in Raleigh. He says instead of spending, put money into savings. Higher interest rates will add money to your account.
After years of earning nothing on our investments, as far as savings investments, we're going to be in an environment where we actually can earn a little bit.
But setting aside money into savings can be tough to do for younger families or people just starting out in the workforce, especially with higher prices at the grocery store checkout and gas pump.
They may not have the luxury of saying, I'm going to really build up my savings account because they're scraping by. But it's still a time to watch the spending, try to build up the savings account.
Certified financial planner Ben Mickham says now is not the time to add to your debt.
You have to just be aware of the debt you have. If you have debt, maybe you really have to be careful about not building up any more debt because inflation's going to be here for a while.
So what can you do if you have debt now? Mickham asks his clients this question.
Are we able to deduct it on your tax return or not?
Mickham says credit card debt is not deductible, but your mortgage interest may be.
If you get a 5% mortgage and you're able to deduct the mortgage interest, then you're really only paying, 3.5 or 4. Knowing whether you're getting a deduction for your mortgage or not at least helps you understand what it's really costing you.
Matt Tallhelm, WRAL News, Raleigh.
Don't freak out. Good advice there. Well, when it comes to your investments in the stock market, Townsend tells us to look at the companies that can pass on costs to consumers. He says companies that are locked in on prices will feel the pinch the most from rising interest rates.